Welcome everybody to Wall Street Reporter's next Super Stock live stream, December 16th, 2021. We are back with Organic Garage, OGGFF, a stock we believe could be our next 10x to 100x super stock. Again, for anybody that's brand new to our program, our goal is to again bring you those stocks which have that 10x to 100x potential. These companies have three common things. One, they're going after massive multi-billion-dollar market opportunities. Two, they are at a key inflection point. And three, there are multiple catalysts in place right now which could ignite that massive increase in shareholder value. So with that said, Matt, welcome back.
Jack, good to be here. Thanks for having us.
And Yossi, who's the strategic marketing advisor, welcome back.
Hey, Jack, good to see you again.
Same here, guys. Now, here's the thing. So this week, you came out with, is it your fourth SKU? This is the truffle butter?
Yeah.
SKU number 4.
Yeah.
Okay. And again, like I was just on, we had an earlier guest, we're talking about metaverse, one of the big themes for 22. Plant-based foods is a massive investment theme that started, I think, how long it's been going for over a year now. We've seen some major wins in that space. We're starting to see, Beyond Meat, Oatly, Tattooed Chef. Those are the NASDAQ, New York Stock Exchange, NASDAQ stocks. We've seen a bunch of Canadian companies do very well in the space. And this is a massive trend that is really just in the early stages. And I think maybe Yossi, you have a lot more experience in the food space, and you've been this, so maybe you can add some color and commentary on what I have to say. But what do you see happening in this, the plant-based food space, and why, what do you see as the opportunity for Organic Garage? Like what, because I know you had some massive winners in the consumer space in the past.
Sure. Well, I mean, plant-based is certainly an amazing trend going on right now all over the world, actually. The U.S. plant-based butter market is up 30%, 36% actually, in a year. The cheese, plant-based cheese is up like 42%. Plant-based yogurt is up 20% year on year. Plant-based is growing much faster, obviously, than regular grocery items. And a perspective, one of the places I worked for quite a number of years was with Groupe Danone. Danone, the yogurt company in the United States. Groupe Danone has a goal of doing 5 billion euro in plant-based products by 2025.
5 billion euro.
5 billion euros, excuse me, 5 billion euros of plant-based products by 2025.
That's like $6 billion
US. $6 billion US, $6.5 billion US.
Basically, that's in 3 years.
Correct.
And this is a mainstream company. This is not like a bunch of hippies. These are like corporate guys.
Very mainstream company. They actually bought a company called White Wave in 2017 for $12 billion.
And what was White? I never heard of White Wave. What did they do?
So White Wave makes silk. They make silk with the coconut.
Oh, okay.
Milk.
That's the what is it called? Silk. What is it?
They do coconut milk. They do oat milk. They do soy milk. They do
yogurt.
They do cheese. Yeah.
Okay.
Right. So they do a lot of the coffee creamers, but they're all much of which is non-dairy.
Non-dairy,
right?
Yeah.
So just to show you how interested they are in this non-dairy plant-based category, even a few years ago when plant-based wasn't in such a big trend, they bought it for $12.5 billion. And in February just this year, they bought a company called Earth Island, or Follow Your Heart, I think it's also called, which is also a very nice, they didn't disclose exactly how much the purchase was for. They're a plant-based company, and they're very interested in that. So I think it just demonstrates a very mainstream company like Groupe Danone is doing this. And so therefore it's a big deal if they're the ones looking at it. If you look, as you mentioned earlier, beef, which is plant-based, is of course Impossible Foods and Beyond Beef. These are growing dramatically. I mean, absolutely dramatically. I think sort of the next frontier is going to be this whole world of plant-based dairy, which it seems pretty clear. And of course, Future of Cheese is really at the cutting edge of all that. And since they're a smaller company, as you know, many of the companies you talk to, they're small companies, they're a lot more nimble. Many of the large companies just can't do that. So today, certainly in the United States, the trend is not only in plant-based, but in a lot of different products. The big companies, rather than try to develop this themselves, which take a long time for them to do, and they oftentimes step all over their own 2 feet, they look for successful companies out there in the marketplace to buy those up and then bring those into their portfolio to really grow the business that way. as opposed to trying to do it themselves.
Okay. In the transaction, the valuations in that space, I mean, the multiples, I mean, multiples of revenues, I mean, they're pretty substantial, no? Like in what people are paying for plant-based right now, or what you're seeing.
Yeah, absolutely. I mean, it's again, the companies are buying big companies are buying smaller companies, less about what their current valuation is in terms of profits and a multiple of that, but they're looking at some of these companies and saying, gosh, if they can sort of break that out and build a lot more revenue around that, that has a very large future value. So the company doesn't have to be, hundreds of millions of dollars, right? A company could be 20, 30, 40, $50 million. And if large companies see a need to that, whether it's in plant-based, whether it's in baked goods, whether it's in non-GMO, a lot of those categories are being looked at for the future opportunity, not so much for what they're doing now.
Okay, so in other words, in theory, let's say a company that's doing 25 million in revenues, and I'll ask one of the questions is, okay, what's the at what point does something become interesting for a big player? Again, not that I don't want to maybe go off on a tangent. We're not saying that future of cheese or organic or business is not for sale. I don't know. This is probably a discussion for way down the road. But in terms of for investors to understand what is the current value, what is this business worth now, I think that's interesting because right now the market is valuing this whole business at like $25 million, and that includes 4 grocery stores which are doing like 30 million revenues. You got this plant-based business which is just starting, and you got 4 products. You're going to have, I think, 8 products. So I think it's important for investors to understand, like, hey, what is the upside here? Because basically you're getting this thing essentially for free right now. In other words, like the valuation of this thing is like ridiculously cheap. Okay, so what I want to ask you is, again, organic or future of cheese. You started off 6 weeks ago. You had, or maybe 8 weeks ago, you had zero plant-based products. Today you have 4 SKUs. You have 4. You got how many lines of butter? You got the
salted, unsalted. We have the plant-based brie, and then, like I said, their most recent announcement is the plant-based butter, truffle-infused butter. Okay,
so the next question. Okay, so Yossi, your business, in case anybody doesn't remember you from the first interview, is your background is essentially you help brands scale. Tell us about kind of your background, and then we'll get into what you're doing with the future of cheese and butter.
Sure, absolutely. I come from the consumer products world. I've worked with a lot of other companies as well, not necessarily consumer products. But my real background is in the consumer packaged goods and food. I worked at about 14, 15 years at Kraft, the big food company, large food company, both in the US as well as Canada. I was an executive and chief marketing officer for Dannon, the yogurt company, both in the United States as well as some of their European companies in the UK. I invented what's called the kids yogurt category today, which is yogurt made especially for kids. A number of products we did at Dannon. And then I've done over the last 10, 15 years, a lot of consulting for many, many different companies, not only in dairy, but in a lot of other areas as well. That's a little bit about my background.
Okay, and I think you've taken some brands, some niche brands, kind of in plant-based, organic, whatever you want to call it. I think you worked with like a yogurt brand or something, like an Australian brand, which you really were able to help scale up and became massive. When you would give us a quick snapshot of that?
Yeah, sure. You got a very good memory. But I worked a number of years ago with a brand called Noosa, which is a yogurt brand in the United States. It's an Australian-based yogurt. At that time, Greek was very, very big in the United States. This was sort of a little bit of coming off the Greek trend. But this product tastes a lot better. Greek is known to be high in protein. Doesn't necessarily taste that great. There's also Swiss yogurt. There's a lot of different kinds of ethnic.
You're an expert. You're an expert in all these, oddball dairy products. Like this is and just to give some context, this business the dairy market, right? Like is $600 billion globally, right? 600 billion plus, if I'm not mistaken.
Oh, I mean, it's huge. I mean, it's absolutely huge.
So this is not like, this is not a small opportunity. It's this huge money made in this. And I think everybody's moving into this, plant-based alternative because, look, a lot of people actually, they don't want to eat, actual dairy, or they can't eat dairy. They can't process it, whatever. So there's and everybody loves. I think most people love cheese, no, or butter.
Sure.
Who doesn't love cheese or butter? I mean, that's like.
I mean, almost unless you're lactose intolerant, which is where some of these plant-based really plays a phenomenal role. Because if you're lactose intolerant, now all of a sudden you can eat everything. That's a tremendous opportunity.
How many people are lactose intolerant on the planet?
Oh gosh, I don't know exact number, but I think it's 10% of the population, one way or another.
We're talking about maybe 1 billion plus people. And then, you have, a lot of people, again, they're getting into this whole vegan thing, the plant-based, okay. So it's massive, massive opportunity here. Okay. So Yossi, here's the question I have for you. Basically you were brought in to help get these products to help, future of cheese, future of butter, scale up, North America, globally, etc. How are we doing on what's the path to get there? I think the last time you said, how many products do you need to have, and what's the path for this, and how are we doing progressing?
Well, I mean, in general, I'll point out another example. The path to success when it comes to new products doesn't necessarily mean you have to start off huge and start off big. It's a big category. You could be a niche player and still be extremely successful. I'll give you an example. When I worked at Dannon, one of the things we did is we developed the first kids yogurt in America, right? At that point in time, yogurt was either fruit on the bottom, where you had to mix it, which was Dannon, or it was Yoplait, which was already pre-mixed for you. There was nothing segmented for anybody special. There was no plant-based. There was nothing for kids. There was nothing for probiotics. All those categories that exist today didn't exist. So the path to success is to take something and first understand what is that people want, to really have a good understanding of what people want. Then you have to adapt it to the taste. So, for example, to tell you what happened in the kids' yogurt, kids liked yogurt till they were about 2 years old, and then it became tart, right? The taste becomes very tart. So a lot of kids said, I don't like that. That's horrible. It doesn't taste good for me. So we had to go to Sweden and look for the right kinds of cultures that weren't tart. We had to have flavors that were oriented towards kids. Cherry, grape, which did not exist really in yogurt. We had to develop those. And then you have to start off small. You don't want to run out there and do too much. You want to get the kinks out very, very early on. So analogous to this, of course, is development of these cheese products, especially the non-dairy cheese products or the plant-based products that Future of Cheese makes, really has a few very, very big experts. You have Afram Pristine, who is a maître de fromage, right? He's a global, one of the few global, the only one in Canada, experts on cheese, a real expert on cheese that really knows what he's doing, right? And you had Craig Harding, who is a restaurateur, who has quite a number of restaurants around Toronto. These two worked very hard together, right, to create, to shoot for and to kind of come up with the best tasting plant-based cheese products that exist. And now what's really happening, it's going out slowly, at least initially, to try to make sure that everything goes well. The butter, which is the regular and the salted, that sold out, I think, in 24 hours, 48 hours. I mean, incredible. The small run that they made sold out very, very quickly. And now, of course, the product is being rolled into other larger stores and to about 50 smaller cheese shops around Canada. The Brie, which was just launched, has a traditional aging process. Again, so it was done properly and created under these people that really know what they're doing in the world of cheese and in the world of food.
Yes, again, from your perspective, dealing with these major global brands, getting products off the shelves, internationally into big. Why are these things important? Like, in terms of like this whole backstory and like all these, like, why, like, is this important? Or I'm like, what? Because I think ultimately what the audience wants to know. I mean, bottom line, all they really care about is, okay, what's the path for this thing to be like a not even let's say only 25 million in revenues, which is not a lot, because if if this company could do 25 million in revenues in plant-based, just in that, that could be worth 500 million plus.
Right. Absolutely.
As a slide, that could be a $10. That could be a. Excuse me. That could be a. Is that 100? Wait, I'm bad with it. I lost track of the math.
You're getting into big numbers there, Jack.
$10 a share. $10 a share. Yeah. So Yossi, what we need to know is, okay, what's 25 million doesn't seem to be like a big, it's not a huge thing. Like, how close is the company right now to getting to that trajectory That's what we need. We need to know about the trajectory, because whether it happens 25 million, in 12 months or in 18 months, it doesn't matter, because the market is forward looking. The market is pays for where things are going. So how do we get on that on that 25 million trajectory, which to me doesn't seem like it's that difficult, is it?
No, I don't think it is at all. I mean, the butter market in the United States, for example, in plant-based is $275 million just for butter. And to go back to the example I gave before with the kids product, the goal was to try to do $5-10 million in year one, starting off slow and then moving it out. It ended up doing $30 million of kids yogurt in year one. Today, that's a $1.5 billion category alone. Just the kids part of yogurt in the United States is $1.5 billion. So I think if you look at this and you say, well, if the butter market is 275, the plant-based butter market is $275 million, and the U.S. cheese, plant-based cheese market is $270 million, right? You got 500 million right there. If you carve out just a little bit of that, that can be incredible, both with the butter as well as the brie. Another area I think which is very interesting, which I find very intriguing, is the whole food service and restaurant area.
Yeah.
There's a lot of work being done on that. You think about the rest, people are coming in there, right? The millennials are coming in and saying they want plant-based because it's better for you.
Okay, so Beyond Meat, right? That's become like on menus. You see, it says Beyond Meat. But
exactly.
How come nobody has a cheese on those things? Nobody has a vegan cheese on there, right? So
that's what's happening. I mean, I think the future of cheese is going in there and bringing in something that melts and browns and tastes just like real butter, right? Which is something that doesn't really exist in the marketplace. And what that does for restaurants is I think it helps the restaurants build traffic into the restaurants, because the baby boomers are saying, oh my gosh, I'm getting older. I have to be more healthy. I have to be more careful with what I eat. I want plant-based, whether it's meat, whether it's cheese, whether it's other products that I eat. And of course, the millennials want that because that's trendy and it's better for you and so on and so forth. So you just look at that, even forget about retail for a minute. You just look at food service and restaurant, the opportunity is incredible in of itself. But of course, at retail, which is an important focus here, if you think about the fact that in the U.S. between butter and cheese is already a $500 million market for plant-based butter and cheese, there's a lot there, and that's growing very fast, 35-40% a year. You don't even have to take market share. All you got to do is take a little bit of that growth of 10% a year, or not 10%, 35-40% a year. That's incredible.
Okay, also, I think actually what you're doing, you guys, correct me if I'm wrong, I think the plant-based butter and cheese, it doesn't really take away, because it's like, I think those people eat, but it adds a whole new market on top of it, no? Because like, I think people with butter, if they're eating butter, but the plant-based butter is it adds a whole new aspect, or am I wrong? What's just the...
Well, it certainly is adding quite a bit, because when the market is growing 35-40% a year, you've got a lot of new people coming into the market. You've got a lot of people who are existing customers who are eating more now that they've got other opportunities and other items to eat. So it doesn't necessarily, a lot of businesses, often it's a share play, where the pie is only so big, and you have to carve out a piece of that pie that already exists, take it from somebody else. Here, you don't have to take it from somebody else because it's already growing at 35% a year.
Okay, so and this, we're going to get into some audience questions. I really want to, okay, so I guess Anthony's asking a great question. Does Future of Cheese, have plans to expand into milk, yogurt, or other SKUs, other categories, or is it just going to be in cheese?
Yeah, no, the original vision was, and we've mentioned this on a couple of previous programs, is we do see an opportunity to consolidate some smaller plant-based companies into the fold that we have with the Future of Cheese. And for us, it would be looking at those segments like yogurt, milk, meat, that pair well with what we're doing with the Future of Cheese and the Future of Butter into a broader future of category, future of meat, future of yogurt, future of milk, because we do see that potential. And the good thing is all those categories, are, well established from a consumer standpoint. So there's an opportunity with the kind of management team we have in place and kind of the branding that we've established to grab, significant market share. So we do definitely see an opportunity with that. Our core business is, with Afram's, experience and guidance, and Craig's as well, is, on the, cheese side of the business. But we do see opportunities, and we're always, engaging in different conversations with companies that are in the market that we feel would fit well into our fold
Okay.
as we look to expand the business. So,
I think,
tons of potential there.
Yeah, I think it's important for anybody who's brand new watching this for the first time to understand, okay, that, you know, the unique thing that you bring to the table, Matt, is that essentially you're running right now a $30 million a year business, 4 stores, a leader in selling, organic groceries. So, and you're a discounter also. You're not a whole. So basically, you know what sells on shelves, what consumers want in terms of packaging, price, taste. I mean,
Well,
everything.
we're being pitched products that haven't even hit the market yet, like stuff coming in, mid to late next year, asking us our interest in carrying it. So from a market intel standpoint, we always saw that as an attractive feature that we bring to the table, is that we're able to guide the business in terms of what is coming to market, what are the retail price points, what is the size of the products, what are the ingredients in the products, what are the taste profiles, to bring that market intel that companies don't get until products hit the market, and yet we're seeing it pre-market. So it gives us a unique insight into what's happening in the plant-based space. And I've said it before, we're at the epicenter of the plant-based movement. Plant-based brands and food brands launch in companies like Organic Garage. They're not going to mass retail. They're launching into organic and all natural grocery chains because it is their largest target market. And so they're looking to attract those sorts of consumers before going to mass. So we're seeing things before it hits big chains and things like that, and we're able to provide that guidance and insight back to the company to help guide them on modifying and tweaking their business plan as we continue to roll out SKUs.
So bottom line, okay, so bottom line is, to answer the question here, is you're going to be expanding into other branded, CPG things beyond just the dairy stuff. You can do, you have plans to do other things?
We are always actively looking and in ongoing discussions with numerous companies that we feel might be, find benefit of being grouped together with a company like Future of Cheese, where they can share like resources, like ingredients, because a lot of these companies use all the same ingredients. There's benefit in grouping these companies together, for scaling up and growth. And we've seen that with the Future of Cheese. And, going back, Jack, I mean, you said it, 6 or 8 weeks ago, there was no products in the market. In 6 or 8 weeks, we've launched 4. And for what we have coming, what we believe in Q1, I think your previous interviewee said it, it's easy for people who are sitting there saying, well, if Aaron Rodgers can throw a touchdown, well, I can throw a touchdown. Well, you know what? It's not so easy. So when you're sitting in this chair, launching products into the market, and Yossi knows this probably way better than I do working for large companies, it takes a lot to launch a product into the market. And so what we've accomplished over the last 8 weeks is nothing short of phenomenal. And what we have coming in the new year, like I mentioned before, we have some key catalysts that we think will be bellwether indicators to the market in terms of finding and solidifying our co-packer, which will allow us to scale and working to get to that 8 or 10 SKUs. Because I said it before, 8 or 10 SKUs, 1 case per SKU per door in 500 doors, with an average cost to the distributor of $5 a unit, is a $7.8 million a year business. So when you're talking about run rate, and 500 doors is very conservative. We're on this program, Jack, and you said it better than anybody. Oatly is in 65,000 doors across North America. So, we're just talking about 500 doors. What happens if we were in 1,000 doors or 2,000 doors or 4,000 doors? So the investor can choose to scale the model as they see fit, but we give the hard math, which is based off of that. And that is exactly what we're working towards. We've executed on everything we said we've done. We told them that we would be launching SKUs. We've launched 4 SKUs in basically 8 weeks, which is very rapid rollout of SKUs. We said we would be launching into food service. We sent out a great press release with top tier restaurants that are adopting our products and putting it on menu to continue to build the brand. We said we're working towards, a co-packer, which we're very hopeful to announce in Q1. And then, working towards the 8 to 10 SKUs, which we're well on that way with what we have in the pipeline to be ready to launch, not only across, nationwide here in Canada, but definitely into the US market. And I think we've accomplished a lot in a very short period of time. And the marketing kind of exposure we've gotten, we just got a great write-up in Veg News which is a large publication out of California, which did a profile on the plant-based brie. So I can only tell you that the momentum is building. But Yossi touched on it. You know, brands are smart, and we took this very cautious approach right from the beginning. We were going to be very direct, very cautious in our rollout, you know, as we continue to tweak and adjust, but continue to grow. And we've done that through the rollout of additional stores and on the food service side. And our goal is in Q1 is to really take the next steps with the business. And I think, you know, from anybody watching our previous interviews, I think we've executed on everything we said we've done. So I think it's you know, a great, you know, accomplishment for the team, you know, of which Yossi's a part of, you know, in terms of what we've accomplished so far.
Okay, so yeah, well, definitely. Okay, so there's a couple of things I want to touch on here. So one of the things, you know, Matt, I got to tell you, you know, a lot of companies come onto our platform, and you know, one of the things I tell every CEO before we get involved, I say, look, you know, you know, the whole thing, the secret to success is you got to have not only just a great story, but you have to be at that inflection point where there is going to be news developments. There's going to be things starting to happen. And in the case of Organic Garage, I mean, you've delivered everything that, you know, you've said. I mean, there's been new products like every, I don't know, is it every 2 weeks? But you basically things that have been launching. You got the real estate thing, the stores, which we're not talking about that today. We'll talk about that later. But the Organic Garage stores are going to be, you're going to be expanding with new locations. So things are definitely happening. And I think the stock started to move. You know, we had a pullback, you know, with the market. Then you got tax loss selling season, the NASDAQ, you know, a lot of stocks have gotten hit. So essentially people are getting this thing really on sale here. Again, the market cap is like, I don't know, it's 25 million, whatever the number is.
Oh, yeah. Now and Jack, I mean, I just want to stress, I mean, Jack, one of your key things is a company at an inflection point. And so when I look at the runway for growth here, and I hope, you know, people who are looking at our story see it the same as I do, is we're right at the start line. And so you're getting in on a rocket ship, basically, for where we want to take this brand and the potential that it has in the market. And so I think for anybody who should be looking at this as one of your key 3 drivers is as a company at an inflection point, we're there. We are ready and gearing the company up for significant growth. And we have the founders that need to be in place, which Yossi touched on, and I could talk, you know, all about that, but we got the people in place, we have the product, we have the brand, we're putting the core building blocks in place to take some big steps. And in the CPG business, you can take some very, very big steps very quickly. And so we're putting those steps in place, just like we said from interview 1, in terms of what our plan was, and we're working and executing on that. So it's one of those key 3 bedrocks for you, a company at an inflection point, which, you know, I think we definitely are.
Yeah. No, so there's a couple of 3 things that I kind of want to touch on, which I think are key value drivers for the story going forward. And Yossi, please jump in on any of these things. Okay. So you entered the food service space, you know, the restaurant sales. So the possibility of having, you know, basically being the cheese or the butter thing, just like Beyond Meat is on menus right now, which is, I think, could be huge. For example, like, you know, I'm not a plant-based guy, but you know, I noticed like if I eating like a burrito, it comes with a cheese, like it kind of gives me like a phlegm type of thing, something like I feel like a cough. I don't know what it is, but I think from eating dairy or something. So I would actually do if there was a future of cheese thing, I would you know, go for it, because it's like,
okay.
I think the cheese that they have, you know, I don't know, Chipotle is not that great maybe. So if you imagine if you were the cheese at Chipotle and I don't know, McDonald's or whatever, or how many of these fast food places are there? I mean, Yossi, you want to touch on like the opportunity there, and what are you doing? Wait, you're the marketing guy. What are you doing to get us into the food service, into the restaurant space?
Well, I think you got to make the restaurants feel that this is something that's going to be good for them, which they know it is. I think restaurants always are looking for opportunities to get products or get something in there that's going to bring more people into the restaurant, right? So today, plant-based is one of those things. You know, if you sort of divide the world sort of between meat and dairy, you've got the Impossible Burger and, you know, Beyond Meat. What's really on the dairy side from a branded perspective is not a lot, right? And a lot of what exists today, you know, is not necessarily that great. I mean, you take as an example of brie. One of the things I think is phenomenal about future of cheese is not only are they coming out with these new products, they're coming out with the products that people want, right? And the products themselves have the aspects to them that people want. So a brie, actually, even though it's plant-based, is actually aged the same way a brie would be aged. It's only got 5 ingredients to it. There's no junk or fillers, or the packaging is biodegradable, even. So it's got a lot of the aspects that everybody says they want. They want packaging that's good for the environment. They want it to taste good. They want simple ingredients. They want to know it's coming from people who know what they're doing. This future of cheese has all of those.
I think so. So one of the things that has the quality of the product is, and again, I would think I think we talked about this, Matt, before. I said, like, brie is kind of like, look, it's a niche thing. It's probably a way for these guys to show off their skill, like the restaurant was what's the two guys, the cheese guys.
Yeah,
it's a way for them to show, because it's a difficult thing, right? So it's a way for them to show off their skill, and it's kind of a door opener, because anybody who knows anything about cheese, they say, wow, these guys can do this with brie, whatever. That means they could do incredible things with sliced whatever it is.
And Jack, to be honest, it exceeded even my expectations. Like we viewed it as that sort of SKU, as a bellwether kind of branding SKU for the brand in terms of cachet in the market and stuff.
Cachet, that's where I'm
but I will tell you, from a sales perspective, and I'm putting my retailer hat on, it exceeded my expectations. I mean, we sold out very quickly, because there is a huge market for that premium side cheese that was not well represented in the plant-based space. You look, the big rush, and look, it's not to fault any company, but it wasn't the cheddars and the mozzarellas, all the basics. But the specialty space in cheese is astronomical. And so launching a plant-based brie, people were waiting for it, and so it blew me away. So we could think that, but the reality is, from a sales perspective, we're seeing it is a very strong SKU for us. So, it's giving us encouragement on that kind of high-end space. Going back to the launch of the truffle butter, truffle is such a hot trend, truffle oil, things made with truffles. And so it encouraged us, with the response to the brie, to say, hey, there's a market for this. People want this, like a premium product at a great price. On the plant-based side, that traditionally they weren't afforded that opportunity, so yeah.
And I think so. I think what was what's his name? The two cheese guys. So he's like the expert, the cheese expert. I think I remember the one thing that's the kind of stuck in my head was that when he talked about developing these products, whether it's brie or whatever it is, he's not doing like the goal is not just to create like some like alternative. It's not an alternative, which is like, okay, it's not quite as good as the real thing, but no, it's a product that in its own right is its own, like it stands up directly with, it could be better than the real deal. So that was pretty interesting. Yes, I want to ask you in terms of, so let's say getting into menus of restaurants, part of the story could be that I would assume that anybody who's running a restaurant, they want to hear the story. Okay, this cheese was developed by a guy who's like one of the top world experts in cheese, right? Which he is.
Absolutely. I mean, I think one of the big differentiating points of these products, a future of cheese versus others, not only does it taste great, not only does it have less ingredients and all of that, but it was actually created by chefs, because they know the business, right? I mean, I think the fact that both Afram, who was the cheese expert, and Craig, who was a restaurant expert, were really the ones behind the development of this, that lends a lot of credibility to the product right out of the get-go. And I think when you go into, let's say someday they may present this to one of the restaurant chains or to some of the big supermarket chains in the United States, that's certainly going to be an important point that differentiates you from anybody else. I mean, hey, look, the global plant-based butter market, is expected to be $1.7 billion, right, by 2026, right? Yeah. So imagine again, a sliver of that, or one or two big chains, it could easily be a 10, 20, 30, $50 million company pretty fast.
Yeah, Jeff, sorry, I was just going to say, on the food service side, just touching on the management team, how rare is it for a co-founder, and I'll speak to Craig's expertise here, who can show a restaurant what to do with the items. Like Craig can craft the recipes of how to utilize the plant-based brie for a restaurant who wants to put it on the menu. Craig worked with one of a food service customer who developed a shortbread cookie with our plant-based butter. So, like that is the sort of level of expertise that we can help provide on the food service side to restaurants who want to get into plant-based but aren't sure how to utilize the items potentially or how they execute. And here we have a world famous chef who can sometimes, depending on where they're located, go to their facility and show them himself. So, on the food service side, and that's what we saw with the first launch of the restaurants we partnered with, is Craig's involvement in helping, these restaurants showcase the item, pair the item, integrate the item into their menus. So yeah.
And Beyond Meat, they can't do that. I mean, I don't think they have that. That's not their thing. Beyond Meat.
Well, it might not be their purview or their their choice.
But butcher guy who's saying, "Hey, this is it doesn't quite work that way." Okay, so the restaurant thing, that could be again a good door opener to get into the retail sales. Now, yes, tell me what. In other words, let's say for example, Future of Cheese, Future of Butter is right now in a bunch of. Could be top restaurants or could be, I don't know, could be chain restaurants. Does that help drive retail, sales at supermarkets?
Potentially it can. First of all, it can create brand recognition in the areas where the restaurants are. Second of all, it can create public relations stories or angles. Hey, they're in this restaurant, this famous restaurant. Afram, who is this fromage, maitre de fromage, an expert. He's the one that helped create it. That's a story in of itself. I mean, the whole company, as Matt said, is the story of the restaurateurs who can actually talk to a restaurant and tell them what's wonderful about it. Same token, Matt, who's a retailer, right, who's also part of the, right at the top of the company, he can talk the language of retailers for other retailers, right? Part of the other talent you have here is not only on the food side of it, to restaurants who could talk to restaurants, but a retailer like Matt, who knows the retail market very, very well, could also lend credibility for other retailers, right?
Okay, so the path again back to the as far as I'm concerned, the main story, which is the stock, right? I mean, Matt, with all due respect, people want to know about the stock, the cheese, whatever. Yeah, okay, but of course they got to have the business to make the stock work. So, okay, but the path for this to be a $5 stock is really, I mean, the bar is very low. You don't have to do that much. I think if the company can hit a $10 million run rate in the plant-based business, again, you got 100 million plus there. Plus, you got the grocery business, which is 30 million plus, and that puts you on the road to a $5 plus stock. And if you get to $25 million in revenues, then you're talking about a $10 stock. And 25 million is really, again, in this business, it's not a lot in sales. So, and let's go through the numbers again. You need to be in roughly, I did the math, 2,000 doors.
10 SKUs.
Yeah, 10 SKUs.
Well, 10 SKUs.
2,000 doors.
10 SKUs, 2,000 doors. Using that math of 10 SKUs, a turn of 1 case per SKU per door. And look, I always remind people, I brought my retail expertise, and our cases are only packed 6 units, so we're not asking, a retailer to turn 24 units in a case or something per week. So just 1 case per SKU per door at a $5 cost to our distributor is a $7.8 million runway. So if you're at 2,000 doors, times that by 4, you're a $25 to $30 million a year company.
Okay, and again, 2,000 doors is like a drop in the bucket in terms of the number of doors there are. Again, because we talked about Oatly being at 65,000 doors. Okay, so Yossi, how do we get into 2,000 doors in the next 12 months?
Good question. That's where really marketing comes into play. I mean, thinking from a marketing strategy perspective, right? You obviously have to create a lot of brand recognition. Once you move into the United States, you need programs that, PR type of programs, bloggers, and other experts who speak about the brand, who tell people about it, so people then learn that the brand exists. Another big area, of course, is you want to get trial, right? you got to be able to go out there and get people to try it. So far, it's interesting. As soon as it gets in the store, everybody's running to buy it, right? Without any fancy plans yet, right? But I think when you go into a large supermarket chain in the United States, they want to know what you're going to do to help people pull it, what they call pull it out of the stores once people go in if they're familiar with it. So you'll be looking at programs, trial-based type of programs. What kind of incentives? We'll be looking at types of incentives to give people at some kind of a discount the first time they buy it. We'll be looking at sampling, maybe sampling the product, whether it be in marathons, at state fairs in the United States, or in the stores themselves, to be able to give them a sample of the product, maybe with a cracker if it's a piece of cheese.
Okay. So you've done this. I mean, you've done this type of thing before with other brands.
Sure.
Okay, so we can drill down to like so many different areas. How do you get? But I guess what investors want to know is it difficult to get into 2,000? Like, if you have a product, how difficult is it to get into 2,000 doors? And again, we're talking about hundreds of thousands. How difficult is it just to get into 2,000? Is that a big jump, or like, I mean, how can you give us a perspective?
No, it's not really a big jump. I mean, it's nothing is ever easy to do, of course. But you're talking about many of the large supermarket chains in the United States, will have 500 stores or more, right? Some of the big ones, you've got the Publix types of stores, you've got Safeway, you've got Kroger. Many of those stores have more than, have thousands of stores, Walmart, Costco, and so on. You land in one or two of those big ones, and you get the distribution in 500 or 1,000 stores. You can be doing 2,000 stores pretty quickly. So it's the kind of thing where you have to be able to make sure that the retailer clearly understands what's the point of difference here, what makes this brand better. Many things that we spoke about. Plant-based, of course, is growing. So one of the sound bites, of course, for retailers is the whole category is growing dramatically, 35 to 40% a year. So they're looking for plant-based. Everybody wants plant-based products.
I mean, basically, the groceries, I mean, they're in the business of selling product, right? And Matt, maybe you can speak to this. Is that everybody's looking for a product that's going to, move off the shelf quickly and make them a big margin, no?
Well, yeah, absolutely. And just going back to the marketing of the brand, let's not underestimate the two co-founders' media savvy. I mean, Avram had, I think, an 11-part series on the Food Network where he traveled the world trying and meeting with cheese producers. So Craig Harding was a celebrity chef on the Food Network on some of their programs. Their connections to media, whether it be newspaper or electronic media. I go back to, we just had a write-up on the Brie in Veg News, which is a large California publication that picked up on our press release launch. So when you're talking about generating publicity, you got two spokespeople that, I've said it before, if you were to put a dollar cost to going out and trying to hire them, I don't even want to guess what it would cost the company. So we have them at the forefront to help push the story. And from a retailer perspective, that's what you want. You want founders, co-founders out in the media pushing the brand so that customers are going into stores. And it's, because I've always said, as a retailer, our job is to get the product on the shelf, not to figure out how it needs to sell. That's up to the brand. The brand needs to push the story. And so when we're talking about, in this circumstance, we have two co-founders who push the story, as better than anybody.
Okay, so it's interesting. You've mentioned it a couple of times, and it finally clicked. I mean, I'm a little bit slow, perhaps. Is that when you have these brands that are like developed by chefs, right? It's like the chef branded thing. Especially if the guy has a reputation as an expert in that product, it does help. Like I remember, and now it's not such a big deal. Maybe like I think was it Wolfgang Puck? That was the first guy to do this, right?
I was going to say that Wolfgang put his name on products. And because of his reputation, well, I would say that for what the categories he entered into, we had Wolfgang Puck soups in Canada for a long time. Unfortunately, they're not here anymore. He pulled out of Canada, but his products were here in Canada, and he had a great reputation as one of the highest quality in its category. You're talking about canned soup, so we're not talking about, nobody's expecting to get the best, bowl of soup they've ever had. It's a canned soup, but his name and reputation gave consumers confidence to say, for what it is, I'm going to get a great product at a great price that I can feed to myself and my family, and I'm going to be proud of it. I'm going to say this is a great product. And so when you talk about, Avram's reputation or Craig's reputation, people's confidence in them in terms of what they are saying or showing to the consumer, then they go out and try the product because they trust Avram and Craig's kind of reputation and experience and guidance to say this is going to be a good product. We really think you're going to enjoy it. it gives consumer confidence. And then on the food service side, which we just touched on, it gives confidence when a chef can speak to a chef. Hey, look, this is what you can do with it. You have a pizza, this is how you're going to want to utilize it. You have a cookie you want to do, this is how you're going to want to utilize it. You have a cheese board, this is what you're going to want to do with it. That gives a chef confidence to say, wow, this guy's done it. He knows how to utilize it. I'm going to listen to his guidance, and this is how I'm going to tailor it for my method, type of thing.
Okay, so the big thing is, and we'll get into some audience questions. Okay, so the scaling up, right? Okay, so I think some people have said before that, okay, so like they're saying, okay, I'm trying to get to stores, I can't find the cheese, it's selling out. Like, okay, so there are some constraints right now, and which is, I guess, purposeful. I mean, I don't say purposeful, but today your focus is not on having massive scale. Right now, you're getting products out. So the question is, when will you be in a position to scale exactly? Is it next month, 45 days? When are we going to get to that?
No, the key thing is a co-packer, and we've said it from day one. And for investors who have been following the story,
that doesn't know, what is a co-packer?
So co-packer is a manufacturer who manufactures your product for you. They co-pack it for you. And so what it allows a company like us to do is be lean on capital requirements, which is what we've said to our investors all along. We do not want to go out and have to be, raise a ton of capital and build a manufacturing facility and run a facility ourselves. No, we want to leverage somebody else's expertise in manufacturing while we focus on product development and marketing the products and pushing the sales, and leverage a manufacturer's ability to scale the product. And so we said it from day one. Our first goal was initially to control manufacturing ourselves. We've done a great job for those people who say, well, I've gone to the stores and I can't find it. Well, guess what? It's selling well. That's a good problem to have. We're happy to have that problem. Yes. Does it cause us to have to adjust? Absolutely. But let's remind everybody, we're 6 or 8 weeks in. These are natural growing pains for a good product that is popular. Yossi knows this better than anybody. It happens. And so the team pivots and adjusts. And look, from a retailer standpoint, same thing. I will just say, for those of you that don't know, retailers, when they list a product, they peg a sell-through quantity. They don't know exactly until they bring it into the stores and it starts selling. And so retailers adjust as well. We adjust our forecasting. We hold more inventory. If it sells out, we adjust again. That's the way it works. It's no mystery there. It's very simple math in terms of how you adjust. But our goal is with the co-packer in Q1 is to get a co-packer that can scale with the growth we anticipate as we want to move the product across Canada and into the US. And so I've said that before. That's a big bellwether indicator for the investor community to say, once we have a co-packer, then we can really rapidly grow. We're not interested in manufacturing ourselves. We're not interested in opening up our own manufacturing facility and investing a ton of capital. Investors should be very happy about that. Let's leverage somebody else's expertise and their abilities and their strengths while we focus on our strengths. And so we'll take it to a certain level, which we're there and doing that, and we can continue to scale up a little bit more. But our focus was always finding a quality co-packer, and our goal is in Q1 to solidify that, lock that down, and then the sky's the limit.
Okay, so Q1, that's a very broad thing. We're talking about January, or we're talking about March. When in Q1 can we expect this co-packer deal?
I don't want to say specific because things can happen. It takes time to negotiate and to find the right company that gives us the growth that a capacity that we want to have. Because I've seen it before with brands where they'll get a co-packer who could not meet what their end goals are, and then they run into constraints, and then they have to find another co-packer, and then that can lead to delays in growth. We want to find somebody who can meet what we anticipate our expectations are as we grow the business. And so we'll spend that time now rather than revisiting it in the future, which is not the time you want to be doing it when your brand is on fire.
Okay, so I think it's good that investors know that because the value that you're bringing here from your kind of experience in running retail, selling products on shelves, selling thousands of products is apparently I'm sure there's a lot of companies, plant-based companies right now that are public that have run into this issue where they may have they're not making it themselves. They have a co-packer and they're not able to scale or some issues, whatever. So essentially, so exactly what's required to get you the type of scale that you need, right?
Yeah, we've said it from day one. We want to have a co-packer. It is a critical piece to our growth story, because we want to be prudent with our capital. And, we do not want to go out there and have to raise capital to open up a manufacturing facility. We've said we run a very tight cap table on the public markets, with just under 60 million shares outstanding. It is very tight, 25% controlled basically by insiders and management. It's a very tight cap table, and we want to keep it that way. We're not interested in diluting. And so a part of that is finding a co-packer, because then your investment is only the physical production they produce.
Right. Just basically the inventory.
The inventory. And so it allows us to devote resources to, given Yossi's expertise, to marketing and growing the story. It allows us to continue to invest in R&D and things like that without, being concerned about, this capital constraint and dilution and things, which we don't want to do for our investors.
This answers the question that people are worried about. Oh, is there going to be dilution? Is the company going to need to raise money? And you're not, because you're not laying out capital for manufacturing or anything like that.
Just to be clear, the acquisition came with capital in the Future of Cheese. The company still has that capital, so they are not burning capital. Their investment is the product itself that they're producing right now to be able to sell to a distributor, to sell to companies like Organic Garage. And our model is to continue with that kind of basis of a business plan, is to keep the investment limited to the physical product, the cost of goods, and not have to invest in things that are not our core forte. We're not manufacturers. We don't want to be in the manufacturing space. We want to be in the creation of products and the sales piece. So that's a key component.
Okay, so so I think if we can basically narrow down the investment story. There's three things that are important to focus on. Number one, for right now, the intermediate goal. Number one is the co-packer to get scale, and it's not a difficult thing. I mean, like if you find the guy, that's not difficult.
We're speaking with multiple co-packers right now. Okay. So it's
basically you're gonna because ultimately the goal is we want to be in 2,000 doors, right? You've got to be in 2,000 doors. In order to get there, you need two things. You need the manufacturing scale, which I don't think is difficult. Number two is you got to have the 8 to 10 SKUs, the portfolio, the suite of SKUs that are going to be exciting for the market. That part that's the hard part, right? Have the good quality products that people want. And then number three is obviously is getting the door. So there's three things. Co-packer, I think that's going to be pretty simple. Number two is, can we get 8 to 10 good SKUs? And then three is actually getting, all those stores, the product. So,
just to put in context for the doors, one major retailer could easily be 500 doors alone.
Okay.
So it is not difficult. It's getting that ball rolling, but it is not difficult.
So it's really to go from here to a $5 stock is pretty straightforward. You get the co-packer, that part is easy. 8 to 10 SKUs, that part is execution. You got we're halfway there. You're halfway there now. You got 4 products. 3 is getting in the doors. And again, if you have just one chain, whether it's a Kroger, is a safe. I think there's Myers is a chain in the Midwest, which I learned from a different client. There's a whole bunch of these different places out there. They're all looking for a product. So my question is, from the investor standpoint, how do we bridge kind of this gap? Because there's a gap, there's like an uncertainty gap of, can these guys do it, right? So the co-packer thing, I don't think is difficult. The question is, are you going to have 8 to 10 good products, and then can you get them? So those are the things. Those are the unknown. And now, can you address those? How do we de-risk those two things? How do we get now? What are the next products that you're going to have? You have 4. How about the vegan cream cheese? What about other products?
Yeah. So I think the proof is in the pudding, so to speak. In 8 weeks, we've launched 4 products, and I've said it on this program before. The SKUs in the pipeline will get us to our 8 to 10 SKUs. We are not concerned about that. So we are in advanced R&D on a good the next group of SKUs. And you said it yourself, Jack, we're almost halfway there to we are pretty much halfway there to our goal of 8 to 10. So I think in 8 weeks, 6 weeks even, we've shown our ability to not only create quality SKUs, but SKUs that are in demand. So that to me is not a concern with the expertise of Afram and Craig. On the co-packer side, all I can say is that we're already in discussions with numerous co-packers because it's been on the agenda since we've launched the company. So like we understand the importance of it. And I've said it before, it's a bellwether indicator to the market when that happens. And our goal is in Q1. I don't want to pick a specific time, but I'm very confident that in Q1, we should be able to lock that down to give us the growth rate and be able to tell a co-packer, like you said, if we want to be in 2,000 doors and turning 1 case per SKU per door, it's easy to go and find and run that math with them to make sure that they can meet those obligations. Okay. And then from a retailer standpoint, you know, for us, look, we could probably hit 2,000 doors in Canada, forget about even the US. So you understand the potential of entering the US market and what that could mean. A large retailer here in Canada could give us 500 doors alone with one retailer. So that doesn't include what we could do in the US. So I'm confident because of the response we've gotten, because of the founders, the co-founders, Afram and Craig's, and their prestige and their knowledge and their kind of media personality, to get the ball rolling. Once you have that quality co-packer and the SKUs in place, it just becomes a snowball. It becomes a self-fulfilling prophecy of demand creates demand, creates demand, creates demand. And I can tell you from our limited, amount of SKUs that we have now, in terms of where we've penetrated, the amount of emails the company gets across Canada and the US looking for the product, the demand is there. So for us, we see a clear path. We've executed on everything we've said so far, and I'm very confident in these next steps to showing the investors that we have the capability to reach those goals, and we're well on that way.
Okay. So, and again, you started with, you had 0 SKUs, 6 weeks ago. Now you have 4, and you never said that you would have 1,000 SKUs. You said from day one, you said 8 to 10. That would be so you're halfway there. I would assume that you're going to have the other 4 or 5 the next, 6, 8 weeks. No, 2 months.
Yeah, I think that's very fair to say, given where we're at with some of them. So absolutely. Yeah, I think, we're working towards that.
Okay. Are you waiting to have, let's say, the 8 to 10 SKUs before you get the co-packer? Are you in a better position when you have 8 to 10, or they're not related? Are those things independent?
They are somewhat related because you want to make sure the co-packer can produce the items you want to sell. So having that 8 to 10 to be able to sit with a co-packer and say, here's our recipes, here's our anticipated production demands, can you meet those? And so not having them means that, you take the risk that the co-packer might not be capable of producing some of those. Okay. So I feel like it's part of our ongoing conversation. Our discussions include what we anticipate to be doing to ensure that the co-packers we're discussing with can produce the items. And so that's a natural, evolution of the conversation that, is happening.
Okay. So so I'm going to speculate and say that, once the 8th SKU is announced, we'll probably have a co-packer announced within a few weeks after that. So I'm going to speculate this will be in February, late February. 8 weeks. Matt, you have 8 weeks.
8 weeks. Well, we're working towards it, Jack.
Well, you're halfway there.
Look, we want the co-packer in place, even more so than the SKU rollouts, which are happening anyway. But the entire team understands the importance of the co-packer. And so it alleviates a lot of focus that is directed to production that could be redirected towards marketing and promotion. And so, it's something that we understand the importance of it, but we also knew that it was not something that we were going to get overnight. We wanted to work through what we're doing now. It was the most prudent thing to be able to help advise a co-packer what our expectations are based off of firsthand experience. You don't want to give your baby without knowing, everything about the baby to somebody else, trusting that they're going to know what's best for it. We want to be able to tell them,
Right.
hey, look, we know how the brie needs to be produced. This is how we need it done. We know how the butter needs to be produced. This is how it needs to be done. And all we want to leverage is their ability to scale in much larger quantities than we can do currently. So that knowledge is going to aid us tremendously in making sure that the co-packer delivers on the product quality that we have currently.
Okay, so to me, it seems like that you're really you're executing in a very methodical way. I mean, everything it's amazing. It's like everything you've done, you've delivered. Everything you've said you would do, you've delivered. So I'm assuming that this will continue over the next 6-8 weeks. We should get to those products. So the next step is, and Yossi, give us your input on this. Okay, once the co-packer is in, let's say we're March 1st. March 1st. You got 8 SKUs, 10 SKUs, let's say 10 SKUs. You got the co-packer. How long will it take to get to those 2,000 doors?
Oh, man. I don't speculate on things like that. But I will say that, once you've got 6 to 8 SKUs of anything, and you're giving the retailers a choice, and you're starting to call on retailers in Canada and eventually in the United States, again, as Matt said, if you land 1 or 2 of significant chains, you can get in 500 stores easily. I mean, or you get a real big one like a Kroger, which has thousands of stores, or a Costco or a Walmart or so on. You can really be in a lot of stores pretty quickly. So I think the goal is going to be at that point to try to, fan out and choose a number of key retailers that we think might be ideal for a product like this at this point in time as a starting point, and then to try to work our way into a couple of those big ones and go from there.
Now,
I just to add to that, I think it's important, we focus on individual retailers, and a lot of brands take that approach where they target a retailer to get into, but we're underestimating our ability to leverage a quality distributor. And so we've kept distribution very tight for us, but for those that know the public markets, they know the UNFIs of the world, a publicly traded company. They go across Canada. Here in Canada, they are the largest natural food distributor in the United States. And so it's great to target a retailer to show a distributor potential. And so I said that in a previous meeting is that, we might target 1 or 2 retailers to get distribution, to be able to hand it over to a large distributor like a UNFI, get it listed with them. But UNFI sells to thousands of businesses, tens of thousands in the US. I know thousands in Canada. And so to get it listed with a major distributor that is a national distributor, then the brand takes on a life of its own. So we could focus on a few key retailers to get 2, 3, 4, 500 doors. But that's the best thing, to go to a distributor and say, hey, look, we just got picked up by ABC retailer. You sell to the distributor, to the retailer, sorry. We want you to handle distribution. But to be able to do that, we want to be put in your catalog, which means we want to be opened up to all the retailers, all the businesses, all the food service customers you sell to, to sell to. So then the business can take on a life of its own, and then the door count becomes exponentially larger.
So now, are those? Do you go along both of these kind of tracks simultaneously? In other words, like you have it, you target retailers yourself at the same time. You're working with distributors who have already thousands of accounts.
We already have distributors approaching us. So
you do? Okay.
Yeah, the distributors is not a problem. We've taken the approach. We are not going to sign on a large distributor until we deal with the co-packer situation, because we don't want to deal with supply constraints. But we already have distributors approaching us. The distributor question will not be an issue for us.
Yeah, because I guess the idea is like, look, once you have the distributor, you have they want to make sure the product is there. They don't want to have like something and not they want it to be on the shelf the next day or whatever it is, and to come back a week later. So this company, I'm not familiar with this. When you meant Unify, is it like a Cisco in the US? Is it like Cisco? I know is like a food distributor.
Well, Cisco focuses primarily on food service, but Unify in the US, if you can look it up, they're publicly traded in the US. They are the largest natural food distributor to grocery in the United States, and they're the largest in Canada. So
natural foods, for natural food. That's your thing.
Well, UNFI stands for United Natural Food.
Okay.
But they're big in a lot of.
I can't remember what the I stands for, but they're huge. They are huge.
Yeah.
So our target would be to have probably 2 to 3 distributors that target different segments of the market. UNFI is definitely up there in terms of scale and breadth of doors that they hit. And so you just need a quality distributor, with quality retailers to really, then the business just grows exponentially.
Okay, so Matt, because I think there might be some people in the audience that might be thinking, okay, well, 2,000 doors, that sounds like a lot. Is Matt and Yossi, are they going to be knocking door to door with a basket of cheese and butter? I mean, no, it's you're going to have you're working with a distributor who sells the stuff for you they have already thousands of accounts, and then you might have a few chains you target strategically who already have 500, 600, 1,000 stores. Is that correct?
Yeah, basically,
you're not hiring salespeople. You're not going door to door trying to sell product. This is like there's a place.
And I'm sure Yossi knows this is part of creating a marketing strategy, but I've always envisioned this as, we have 2 people who are the best at what they do, Afram and Craig. And so targeting a few key retailers that help get the ball rolling is what the focus would be for somebody like Afram and Craig. What you leverage a distributor to sell to is the mom and pops, the 1, 3, 5, 10 store chains that you can't reach. You can't speak to everybody. We're not going door to door. And so our goal is to focus on a couple of key bellwether accounts that Avram and Craig and the team would focus on in terms of meeting with and discussing with, getting a quality distributor that distributes to that chain, and leveraging then that distributor to put it in their catalog and become a sales piece as well as Avram and Craig and the team's ability to sell, and in terms of our marketing plan that Yossi is a part of, to help build the awareness and the growth and the natural snowball effect that comes from that. And that's the strategy. And it wouldn't be any different in Canada that is in the US, is to find 1 or 2 key quality, larger scale retailers to really scale up, hand that over to a distributor who a distributor is going to love having a large account to sell to and give them confidence. Wow, okay, so these guys are selling to ABC retailer, they're in 400 doors. Great, let's pick it up and let's blow it out to our network of companies we sell to. And it'll be the same approach in the US.
So pretty much, I think we've spent the last 15 minutes going through just these basic points. I think we've de-risked, we've taken off the table. Like it's a fait accompli that this company is going to have 25 million in revenues across 10 SKUs. Now, is it a question, are you going to hit that 25 million by June of this year, or by June of 22, or by June of, I don't think it really matters, but it's basically, that's kind of the question of if is off the table. It's a question of when. In other words, is it going to happen in the next 6 months you're going to get there, or is it going to take 12 months to get to that run rate? Because it seems like me, it's like a done deal to get these 2,000 doors. You already have in other words, you're going to have the product's already there essentially. I mean, I'm sure you're not telling us, but I'm sure you already have the other 5 products. They're basically
you said it, I didn't say it, but okay. I don't look, nothing is a done deal. Yossi and I, and the team have always discussed, look, the retail business is ever changing, the consumer package business is ever changing, so nothing is easy. And like your previous interview said, I think you said it great, it's easy for those in the other chair. It's not so easy, that $1 million in sales, that $5 million in sales, that 10 million. It's not easy, but what I will say is
the first million. Yeah, the first 5 million. But then after that, to get the 25 or 100, that part of
it starts to multiply in the consumer package business. So yes, absolutely. But look, the path is clearly laid out. We've told people the path. We've executed on that path. We're well on our way to accomplishing what is laid out in front of us. And so I think, I said it before, one of your key bellwethers, Jack, and companies that you like to focus on is, are they at an inflection point? And I would say as a company, we have shown proof of concept. We have shown consumer interest. We've shown retailer interest. We have shown restaurant interest. We are growing the SKU base. We are in discussions already with co-packers. And the SKU base and the co-packer, we've turned down distribution, because we understand we have a path and a business plan that we want to execute on. We will work with distributors who will scale the business. We will list with larger retailers to reach our door counts, and I'm very confident on that path. Absolutely.
Okay, now one thing we've completely not talked about is the fact that the product is actually selling well. It's constantly getting sold out in the number of stores you're in right now. Like, how many stores are you in right now? You're just right now in a small regional area while you're building it out. So how many doors are you in?
I think we're in the 25 to 50 range. I mean, I always advise people to look on the Future of Cheese website because they're constantly updating the store list and things are changing so rapidly. But you know what? Look, do we want to be out of stock? No, but I would say that it is better than the people going in there and the product's not moving. So I would say for SKUs like the brie, like I said, I'm a retailer. I've been doing this for 15 years. I've seen a lot of products. I'm usually very good about forecasting a product. It has exceeded my expectation for the retail price point and the sort of specialty product it is. It has blown me away. And so we're scaling up in terms of what we're carrying in our stores. I can only imagine for other retailers as well. It's been a very, very pleasant surprise. So I think we're very encouraged by what we've seen so far on the sell through. So yeah.
Can you talk about actual numbers? Like, I mean, you're basically you're not giving these things for free. You're selling product, right? Nobody's getting these. Like,
no.
What kind of numbers?
We've promoted it. I'm not in a position to get through, or convey actual numbers in terms of sell through. But look, the brie is a $13 to $14 retail selling point. This isn't a $2 stick of cheese. So right. When we set the price point, we anticipated this to be a somewhat slow mover, in terms of the market it was targeting, but to help build the brand in terms of the excellent quality that it would help build awareness of the brand, because people who bought it would be blogging about it, Instagramming about it, which is what's happened. What I didn't anticipate is the turn rate would be much faster, much, much faster than I anticipated. And I would say that even probably the team anticipated. And you know what? It's a good problem to have. These are problems you want to be discussing as a brand while you're scaling up. And I'm sure Yossi went through it. When they targeted a $5 to $10 million kids yogurt brand and it went to 30, I'm pretty sure there was all-night production runs going on to keep up with demand and retailers saying, hey, I'm out of stock on shelf. When can I get more? And you're talking about $1 billion, company that is used to producing in large equivalents. But when they're doing 3 times what they thought in the first year, there's going to be production problems. There's going to be sourcing of ingredient problems. And I'm not saying we're having those issues, but I'm saying these are good problems to have.
Right. That's exactly what happened when those they just couldn't make it fast enough. They wanted it, and they had to step back a little bit and find ways to increase production by going to a third shift, by trying to maybe produce it at a second plant. All that was happening. So it's good if you have some of it, right? You want to be able to balance the two. So you start off a little bit slower, so you can then use those numbers as a way to predict what's going to happen next, right? And it all happens next before you have a chance to react to it.
And that is exactly, the why we took the route we went to before going the co-packer route, is to learn some of those things, to be able to go to a packer and co-packer and say, hey, look, we know what our anticipated volumes are. You need to be able to meet these volumes for us to keep up with the demand that we're seeing. And so, it's no different than in that example. There's only so much you can plan for in retail. All I can say is that the team is pivoting very quickly. I would say as a retailer, we're pivoting, quickly to keep up with consumers' interest. And it's exciting. Look, I'm excited by it. I'm blown away, and it gives me a lot of confidence in the direction the company is going. And I hope, investors and people seeing this can hear it in my voice. It is a good problem to have. It teaches us, it allows us to pivot and adjust. And I can speak no better than Yossi's example. You anticipate 10 million in a kid's yogurt, you end up doing 30 million. That's exactly what Yossi said. There's third shifts, there's fourth shifts. There is, we got to buy more ingredients, because you're doing 3, 4, 5, 6 times what you anticipated. you can only anticipate so much. Once you see the real world results, you pivot, and we have the team in place to be able to pivot and adjust. So I'm very pleased with how we've adjusted, and it's a great problem to have. I mean, I don't know what else to say. I'd rather be in this position than scratching my head to say, well, it's not selling. What's going on? What can we do? You know, that is not a problem we're having.
Let's see if we can I want to get to a couple of questions before we wrap up. So Mitch is asking, are you positioning as a high price exclusive product, premium product? Hey, just for context, what are your SKUs selling for? Like, if you want to give us the numbers.
The butter has a $9.99 MSRP. It is well in line with the other plant-based butters in the market, whether it be the Miyokos or Earth Zone or other brands that we see here in Canada. So we're not concerned with that. We positioned it as it is not a discount product. It is a premium product, but the retail price point is at market. The Brie, it's hard. There's no comparable, but if we look at premium plant-based cheeses, it is well within the range. It's not a cheap item by like I said, it's not a $2 stick of butter, but or a $2 stick of cheese. But we didn't position it as a $2 stick of cheese. It has a $13.99 manufacturer suggested retail selling price point, and some retailers are selling it for more than that. But that is the goal that we set for what is in the market. I know that is what we're selling it at our stores. And because it is a great product. There's no reason to have to give it away. There's lots of room for, going back to Yossi's expertise, to put it on promotion where a retailer wants to. There's lots of margin dollars there from a retailer standpoint to be aggressive if they want to put it on sale, which is what you always want to do as a brand, is give that healthy room on the margin side, because it's a 35 to 40 point margin, which is where you want to see a specialty product to be at, and to be able to discount it, $1 off, $2 off, and still be making a healthy margin on it. So it's been well positioned in the market. And I would say any of our other products we're looking at, it is always to be where the market is. We are not going 30% above market and hoping that we can just sell product in Craig's reputation. No, we want to be in line with the others. And what we want to set it apart on is the quality of the products is second to none. So people are getting it at market price, but the quality they're getting is superior in our eyes to what's out there, and that's a great position to be in.
Okay, yeah. So the pricing is in line with where it is. Okay. So in terms of what can we let's kind of wrap up on this, which is for 2022. For the first, let's call it 90 days, because we're not going to make projections about a year from now. But for 90 days, can we expect to see the next 5 SKUs out?
I would say that we're well on that way. So we will continue to have product releases, and reach our goal, 10 SKUs. Okay. We're halfway there. The next stuff we have in the pipeline, I will meet that goal. So I think that is something that we're working towards in Q1. And like I said, the same thing with the co-packer in Q1 is a goal of ours to solidify and be able to announce, which I think will be a bellwether sign to the market. Hey, we're off to the races. And so that's what we're excited about. Okay.
I just want to maybe spend like 2 minutes on the store, the groceries, the organic garage business a little bit. We do have a lot of it because, you're doing 30 million in revenues in that. So that's it's a substantial business. So one of the things I think investors are interested in is, okay, you have 4 stores, you're doing 30 million. It's just right now in Toronto, a small area of Toronto. Can this be scaled, internationally? You talk about North America, and then after that maybe the world. But what about new locations? I know you put out an announcement about Savills, I think, was getting
they're representing us. Yeah.
What's the update on that?
So the goal, that we set out when we announced that was to get a group of sites together that we could take, a big step as a retailer. And I think Savills is working very hard with that. There's a lot of sites we were inundated with, and I think for us, we want to take a big step. We want that 4 to 6 site. I want to say, sometimes these back and forth, they can be sometimes painful, with back and forth with landlords and things like that. But Savills is working very hard, and our goal within next year is to put together a suite of sites that take one big step forward for us and get us into that 8 to 10 store range, which is where we want to be. Because to go from 8 to 10, to 15 to 20 to 20 to 30, is not difficult. But we want to take that big step forward, fill up that pipeline, and our hope is, looking towards next year, to be able to have some good announcements when it comes to not just announcing like one site and then 6 months later another site and then another 6 months maybe another site. It's to maybe take a couple big steps with a 4 to 6 store package of stores that really move the needle when it comes to the brand. And then Jack, just exciting from I know, because I know you always talk about US expansion, but it is exciting. We have had some people reach out to us that have seen what we're doing and what we're about. And, we had somebody reach out to us from the US asking us about, hey, would you be interested, maybe in looking at, markets like the New York market and things like that. And going back to what we've always said is, hey, look, we're always interested in looking at new markets. For us, it would be to find a quality operator that knows the market well and work with them on, licensing and helping giving expertise on the brand and what we're about. And, like I said, just this last week, I had a very interesting conversation about, the New York market and what's in that market and what a kind of spaces look like and things like that. So, I just always want to reemphasize to our investors and people looking at our story, there's always conversations going on, and there's a lot of interest, definitely on the plant-based side and what we're up to. But I would say, for those that like our retail business, a lot of people, are very excited about what we're doing in the retail space, and look at us as potential, for different markets and things like that. So, lots of stuff happening. It gives me great kind of expectations for what we're going to be able to accomplish over the next 10 to 12 months in terms of moving the needle for the company on both sides of the business.
Okay, so Matt, when you started speaking, the internet kind of went out on your end a little bit, but you said something which is very important. We got to repeat, which we never heard before. You never said this before, but essentially you said, can you rewind, repeat what you said? You're talking to landlords, and basically you're looking to do you're going to roll out 4 to 6 right away. You're looking to do
we're looking to put together a group of sites that can move the needle for us. And so, look, we always want to be cautious of dilution and capital requirements. So it's always a balancing act, but we do feel there's an opportunity in the market to take some big steps forward. And so for us, what we've challenged, our real estate team with, Savills, is to put together a group of 4 to 6 stores that could really move the needle for us, within a relatively short period of time, because we want to capitalize on the interest of what's going on in the grocery space. And look, as sad as it is to say, with this new variant and stuff, and there's new lockdowns, and people are getting concerned again, and it just re-trumps the interest in where am I going for my groceries? How do I get them delivered to home if I don't want to go out? I'm concerned about my health. And then you get into who's selling organic and natural products, like it just renews the interest, again. So
people, wherever they are,
people need to eat. So
they don't need they don't need the metaverse, but they do need to eat.
Well, you said that. I didn't say that. But know. Yes. I don't want to demean anybody's,
this is business, air. They need air. They need to eat.
They need, they need food, water, and shelter. That's what it comes down to when these things happen.
So the big takeaway from today, we got into this like almost an hour into the interview, is so there's going to be an announcement at some point that, okay, the company is rolling out.
It is what we're working towards. It's
not going to be
challenge.
We're not going to see an announcement in March. Okay, we just did one deal. No, it's going to be like 4 stores we're launching, and we're going into construction, whatever. I don't know.
Our goal is to fill a pipeline and to take a major step forward, and that is the mandate.
As Mao Zedong said, the giant leap forward. This is the flight.
We want to hit. You know what? I kind of joke about it. We want to hit 8 to 10 SKUs in the future cheese, but we want to hit 8 to 10 stores in the organic garage universe as well. And that to us is a key mark for us as we look to scale up and achieve greater market penetration. And so, look, we can take a slow approach if we choose, and you know what? There's nothing to say that might happen. But I would say the mandate is, and what we're working towards on the inside, is to take a significant step forward. And I think I think my belief is and hope is, and what we're working hard towards is that will happen.
Okay, so the giant leap forward is this year. This is the giant leap forward, and it's two parts. Part one, 8 to 10 SKUs, going into 2,000 doors, 25 million in revenues, and 8 to 10 organic garage stores. Basically, 4 new stores, maybe 6 new stores. Let's say just 6 stores, which is not difficult. I mean, Yossi, you've seen guys open up 1,000 stores, right? I mean, it's not. This is not.
Not at once.
Well, not at once, but over a little bit of. But
We've announced 4 to 6 stores that open over a set period of time that at least double the size of the company. That's what we're working towards.
So basically, there's a clear path right now for Organic Garage to double the retail business. So that'll be, let's call it 60 million in revenues. 60 million in revenues, and if you can get these stores, if you can get halfway there this year, I think the market will pay 4x for that. So that's 250 million. That's $5 a share. That's what the stock would be worth. Plus, on top of that, you layer on the plant-based business, which is another $5 based on that valuation of 10x revenues of 20, and that's a $10 stock price.
Yeah, and I know investors, they're always interested. Hey,
not crazy. I mean, look,
what's going on with announcements for new stores? But I think just to remind everybody,
because
we're not announcing things doesn't mean there's not things happening behind the scenes. We announce things once they're done. So we're working towards that. And so our goal was to put together a group of stores. And so, you might not see an announcement, one this month, one next month, but I think when it does come, our goal is to be able to announce a suite of stores over a certain period of time to open them, to take a major step forward for the bricks and mortar side of our business. Okay, so essentially right now we just laid out the case. Here's why the stock can be $10 very easily. There's 2 parts to it. Part one is doubling the store count. That's adding 4 to 6 new stores, which is, and we talked about before. I mean, I don't want to rehash, but you have a system to do it. It's pretty easy. It's not like you're going to be out there by yourself, painting the walls and whatever. There's a system in place to do that. You have the distribution. You wouldn't want me painting the walls. I'm not a good painter.
I mean, you have a system in place to scale up, which is the thing that I love so much about the retail businesses. Once you have that model dialed in, you can scale up ad infinitum, and investors can extrapolate the revenues, and that's why that the stock can get that massive valuation. And by the way, it's not even a massive valuation. $10 is really like a starter. So you got the 10 stores exiting 2022 with 10 stores, and on track to get to 2,000 doors with 10 SKUs of the cheese. These are actually small goals. These are not crazy like moonshot, like we're going to Mars, we're going to.
Well, Jack, it takes a lot of work, but I think our goal is to show that path.
Right.
What we're able to deliver, it's hard. There's lots of variables, but I'm confident that we will be able to show a path towards some of the goals you've outlined during this next 10 to 12 months.
But it's a difference. But where you are now is like the difference between the Wright brothers with a plane going for 2 minutes and the first the Mercury rocket. I don't know if anybody knows what the Mercury the first one to go into orbit. But anyway, nobody believed it. But once you can go into orbit, then you could go to Mars, to the moon first, and then to Mars. But first you got to have the Mercury rocket to go into orbit, and you already have that. The rocket is already there. Now it's a question of which planet do you want to hit first.
That's a good analogy. I like that analogy. Yeah.
The rocket is there. It's a question of which planet are we going to first.
Yes. I would say that's a good analogy.
I'm gonna end on that. This is
that's a classic. That's a great one.
Okay, guys, thank you very much. We're gonna catch up to you in the first weeks of January.
Appreciate it. Wishing everybody a happy holidays and a very healthy New Year.
Thank you, Jack. Great to see you again. Bye.
Bye.